Good morning. It's the 20th of October, Thursday, and it's the VSA Morning Miner, David Scriven, and I'm with Ollie O'Donnell. How are you today?
I'm very well, David. Thanks. How are you?
Not too bad, not too bad. So let's kick off with I see the news on the US infrastructure announcement and what the implications might that be for us, Ollie.
So big announcement yesterday, afternoon, early evening for us. $2.8 billion of funding committed across 20 manufacturing and processing companies in 12 states in the US. So in total, the capex bill is $9 billion. So the US government stepping up and taking on about a third of that, and that is to help EV manufacturing primarily, but it covers the sort of usual suspects: lithium projects, graphite, nickel, but also further into the supply chain with a lithium electrolyte salt facility, an electrode binder facility, silicon oxide production, and a lithium iron phosphate or LFP battery factory. But in terms of direct impact on junior miners, Piedmont Lithium was one of the beneficiaries, getting $142 million loan, which covers a portion of their $600 million capex in Tennessee for 30,000 tons a year of lithium hydroxide. So that's obviously very positive for them directly, but the read through on that is very good for Atlantic Lithium, who Piedmont have committed a significant chunk of funding to. So given that their shareholders and creditors are being supported so strongly by the US government, should make things easier to get Atlantic Lithium funded. They've also come out with some drill results today, pretty much in line with what we'd expect in the infill drill results, intercepts between 40 and 80 meters with grades of 1 to 1.6% lithium, very much in line with what we've come to expect. There's a few holes outside of the current mineral resource. One particular intercept 67 meters at 1.51%. It is quite deep though, from 235 meters. And if you look at the full chart, I think you've just got to be a little careful on the true width there, which probably looks closer to 20 meters, as it's quite a steeply angled drill hole there, but still showing potential for growth beyond the current mineral resource. Which is good.
Yeah, that's encouraging, and on the infrastructure, of course, a really strong endorsement for the battery materials theme. But then, of course, flipping back to Atlantic Lithium and their news, Sentiment, I noticed, came out with some news. What are your thoughts on that?
Yeah, strong Q3 numbers. I think the market quite likes them. The stock's up a little bit this morning. So gold production was up 23% year on year and 15% Q on Q, to about 128,000 ounces in Q3. So that means they're well on track for the middle of their guidance range. Now, such a big jump, I think, given the problems that Sentiment has had over the last few years and is trying to build back its reputation for consistent operational performance, I think the market would have been sort of slightly skeptical that it could have achieved the guidance, knowing that it needed to make up such ground to get there. So that's why market reacting strongly this morning. As a result of higher production, all-in sustaining costs were down 5% Q-on-Q, but they are still towards the upper end of the 22 guidance range for the full year. That's what they're on track for, as the company previously guided to a higher capex bill in the second half. But overall, just down 7% year to date. I think, in terms of what's going on in the wider gold equities space, that's a pretty robust performance. Obviously, they're benefiting from the fact that the share price is traded in pounds rather than USD, and GBP weakness will have been helping them out there a little bit.
Agreed, and yes, that currency translation will be a favourable thing for them. So I think perhaps, unless you've got any further thoughts, we perhaps ought to wrap up things here.
No, that's, I think, about it for today.
Many thanks.
Thanks, David.